So it's my pleasure to introduce Carrie McKellogg. She is at Rediff, and she wrote a wonderful chapter with her colleague Carla Javits, who unfortunately couldn't be here today, but we're going to hear a little bit about that and Rediff's interest in how we can use social enterprise in particular as a way to get to the outcomes that we care about. So Carrie.
Thank you. Yes, I was going to say on behalf of my co-author, Carla Javits, who can't be here today, we're very grateful for the opportunity, and having worked with David and the Federal Reserve and the Nonprofit Finance Fund has been such a great opportunity for us. And Jed Emerson in the back, who's the architects of some of the things I'm going to be talking about today. I would be remiss in not mentioning him. So I would like to talk a little bit about a solution that is outcomes-based, but that also targets vulnerable populations. And when we talk about vulnerable populations in the employment context, we're talking about people who have been historically excluded from the workforce because they face barriers like a history of incarceration, of homelessness, youth who've dropped out of school, people who've faced addiction, for whom the workforce system doesn't really have an on-ramp. But at the same time, we see things like data that just came out the last couple of weeks around the low unemployment rate. And so we're trying to square the circle between these people who have been historically excluded and the sort of positive momentum around employment in the rest of the country. And I think it's because the workforce system is not prioritizing these people, right? We have a workforce system that's essentially oriented around very short-term outputs, getting people retrained, getting them back into a job. And we have the incentives of that system built around it. We're also seeing new data around the historically low workforce participation rate, which is really an indicator of the fact that there's been a lot of people who have tried and they've left the workforce. And again, it's about a system which is not incentivized to invest the resources that would be needed to bring people back into the workforce. And I think it's curious because the health sector, the housing sector, have identified this problem of high users of public services and have targeted interventions for those high users and prioritized them because they saw there would be a cost effectiveness. Well, the workforce system hasn't really done that yet. So one of the potential solutions, which Rediff has been a funder of for many years, and as an intermediary, I think I love some of the comments from the two Freds, because both funding and seeking funds as an intermediary puts us in a very interesting position of having to have that conversation in both directions. But Rediff, as a funder, we have approached this question as a venture philanthropy by funding social enterprise. So CEO is an amazing example of an enterprise, and Sam didn't touch the workforce component as much, but essentially we are talking about regular businesses who are engaging in the market, but who are providing a supported work environment for people that face these barriers to employment. And I think the reason why we can say this is fundamentally an outcomes-based model is that these businesses have to compete in the market. If the goods and services they provide are not demanded by the market, they will fail. And if the employees who face these barriers, for whom they provide this supported work environment, are not able to do their jobs in those companies, then the company will fail. And so the enterprise has to be a market player, and the incentives have to be built such that these barriered employees can be supported in a way that contributes to the bottom line. So as a participant in this sector for a few years, Rediff has found a couple of outcomes-based, data-based practices that have been important in the way that we think about who we fund and why. And I think the first step was taking this venture philanthropy approach. We focused on two main metrics: the number of people that were able to be employed by these businesses. So again, not the number of training hours, not the number of classes offered and certifications, but rather the ability of that business to grow and add more employees. And then the retention rate of those employees once they were able to transition out of that supported work environment into competitive employment. And again, I think tracking that information was key. And I think we have some really impressive data based on a third-party evaluation, which was not cheap, which we funded as part of our work because we wanted to have that validation of our work. But when you're able to show that, before employment, 29% of somebody's income came from government benefits, and you were able to show that as a result of being employed at a social enterprise, that essentially flipped. 70% of somebody's income is coming from work, and 30% is coming from government benefits. Well, then you have a story to tell about the return on investment of funding this type of workforce program versus a traditional workforce program. And in fact, in an environment where workforce funding has gone down by about 20% since 2010 and is likely to go down even further, I could say I have a solution that is providing its employees with an employment experience which is 19 points more likely to keep them employed at 1 year. So I think that's a pretty compelling case to take to the Department of Labor or a workforce board and say, look, I've got a solution that really focuses on vulnerable populations and that's going to keep these people employed in the medium to long term, which we all know is much more cost effective, but is also impact effective, right, than just a quick retrain and then somebody's not staying in the workforce. So I would argue that this is a mechanism that we should be thinking about how to scale. And finally, and Jed Emerson in the room here was one of the architects of this concept, which is how do we quantify the social return on investment? And I think this is very powerful, but in order to do it, you have to collect the data and you have to assess the impact. Otherwise, you don't have the numerator and the denominator of this calculation. But essentially, by conducting a third-party evaluation, by investing the resources in looking at this long-term retention rate of people employed, we were able to come up with this calculation of how social enterprise benefits society. And this is a number that, while for every dollar spent, taxpayers receive a certain benefit, society as a whole receives a benefit of $2.23. I mean, these are, when you compare them to a standard workforce development program, you're looking at multiples of return, right? This is a more sustainable solution because these are businesses which generate revenue as opposed to a social program which requires a budget outlay to completely subsidize the work. So again, the challenge now is how to scale this. I think there's some really bright minds in the room to think about it. One way we talked about in the Fred's panel was around just contracting, right? Because these are real businesses, if the public sector viewed social enterprise as a commercial partner, the lunches that we had today, the maintenance crews that have contracts for these buildings, that could be funded through contracts from social enterprises, which are then generating this benefit to society while providing a valuable good and service to the market. So I think thinking of these types of interventions less as a programmatic, but rather an economic partner is one of the ways to really expand the ability of these enterprises to grow and impact more people. Thank you.